Okay, I think we're ready to go. Good evening and welcome to today's workshop. This is one of a series of small business webinars being brought to you by the Mount Lebanon Library along with Pittsburgh SCORE. So tonight's topic is simple steps to start your business. And my name is Mark Fallek and I'm your host. I'd like to begin by providing a brief introduction of SCORE, if you don't mind. And again, welcome and thank you so much for participating with us today. All right, so I'm going to tell you just really briefly a little bit about who is SCORE. So SCORE is an organization that began well over 50 years ago. And our mission, of course, is to support small businesses. We've helped over 10 million different people at this point in time since our inception. And importantly, let us tell you a little bit about SCORE Pittsburgh. SCORE Pittsburgh's got over 50 volunteers. All of us are unpaid, all volunteers, and we come from very diverse backgrounds in terms of business. Many have come from small businesses, some from corporate America, and some from probably a little bit of both along the way. But our coverage is primarily in southwestern Pennsylvania, and we focus on not just small businesses that are in startup mode, but those that are in business or even looking to sell their business or figure out what the next steps are for themselves. There's over 350 chapters in the network of SCORE serving small businesses throughout the United States. So what is it that we do? Really, it's three things. Number one is the workshops like the one that we're all participating in right now. We also offer something called Small Business Basics that are done once per month for people thinking about starting a business aside from this particular one. We also provide free and confidential mentoring. That's the main thing that we do throughout southwestern Pennsylvania and around the United States. So if you go to our website, you can sign up for mentoring. And again, we've got over 50 different mentors to support you. Lastly, we've got a number of online resources available to all of you. If you go to either our website or score.org, you can find all kinds of information to help you in your business, either for startups or even for running your business. So that's what we do. Just to give you a little bit of some of the things that we've been able to accomplish. Typically, we help start a number of new businesses every year. 2 years ago, it was 161. And importantly, you can see on the right-hand side of this slide what people believe our value is and how we help them. So we've got a very, very good background in people's feedback to what we do. Okay, so lastly, if you want to contact us or work with us, you can either call this number or just visit us at our www.pittsburgh.score.org website, and you can sign up for mentoring or receive information like we talked about just a minute ago. So just so you know how we're going to work tonight. So we'll be taking questions from you through the Q&A button on your screen, and we'll ask our speaker to answer them at the conclusion of the presentation. So we'll be keeping everyone on mute during the entire session, just in case you wanted to know. So tonight we're going to be talking about simple steps to start your business. Our speaker is Bill Stilz. So Bill's a member of our SCORE organization. He's been with us for the last year and a half. Importantly, Bill's got a big background in the commercial insurance and risk management area. He also has a background in teaching. And importantly, over the last 15 years, he owned a commercial insurance agency and was involved in a number of important aspects of running that business. So let me introduce you to Bill and let him get started.
Thank you, Mark. Can you hear me all?
I can.
All right. Good evening, everyone. Thank you for coming. As Mark said, this was originally a partnership between Mount Lebanon Library and SCORE. We originally had planned to put 6 workshops together in person, but the coronavirus had a little different change on that. So we hope to do 6 topics for starting businesses. Basically, we have 3 scheduled already, one tonight. We have another webinar on June 23rd, which is Introduction to Small Business Finance. And then on July 20th, Legal Aspects of Starting a Business. Later this year, in the fall, we'll be picking dates, and hopefully those ones we'll be able to be back at Mount Lebanon Library and be in person, but we'll do strategic planning, effective marketing, and online sales and marketing. A little bit about the seminar tonight. Going to talk a lot about the basic starting points. You're not going to be able to take this hour course tonight and go out and start your business, but hopefully tomorrow you'll be able to know, what do I have to research? What do I have to think about? What are some of the topics? And that's the basic purpose of this. As Mark said, at the Pittsburgh SCORE website, there are a lot of online resources. And this presentation is really based on one that's available. It's called the Startup Roadmap. Down below, there's a little link there. We hope to be able to share all these slides with you, but if you just go on to the Pittsburgh SCORE website and Google Startup Roadmap, you will find us. It's 12 chapters. It will go into a lot more detail than the subjects I'm going to talk to tonight. All right, introduction. Your business always starts with an idea. You come up with an idea and you think it's something that would be able to become a business. However, the key is not just having an idea. The key is planning. The idea alone is not going to get you there. There are so many other areas you need to think about. And that's what we're going to talk about today. You can see how important the planning is. Businesses, first year, after 2 years, about 76% are still around. But you can see as 3 to 5 years, they fail. It's not because they had a bad product many times, it's because they haven't planned properly. They haven't put all the different aspects of a business together. And that's what we're going to talk a lot tonight about, what these aspects are. First place to start when you're planning is to look at yourself in a mirror. Do you have the characteristics an entrepreneur needs to be a successful business? You look at some other critical factors. Do you have a good choice of the business opportunity? Do you have skills that fit that idea? Do you have adequate capital? Even if you're starting a small business, there can be some costs. So do you have the capital to start that? Do you have knowledge or experience in that field? Do you have a strong work ethic, effective time management? And another thing you need to look at is willingness to obtain input from others. You're not going to be able to do this alone. It's one of the things that SCORE offers. We have some mentors that can sit and talk to you and help you through this. And most importantly, the ability to manage and multitask. You'll find out as you start a business, you wear many hats, whether it's a CEO or sales or customer. So it gets very challenging. There's a lot of different skills that are needed. Over the years, as we've worked with customers, our clients who started business, we have found some of the characteristics that help. Are you a good self-starter? Are you resourceful? Are you responsible, organized, a hard worker? Will you be persistent? This does not come easy. Even the best idea takes a lot of work. Decisive? Do you have the health to do this? And one of the more important things, if you have a family, they're going to be supportive. You're going to have some long nights and some hard decisions to make. And I've always found out when I ran my business that my family was always important to be supportive. Okay, so you looked yourself in the mirror, you think you're ready to start a business. Well, one of the first things to do is know your options. What type of business do you think your idea would fit into? You can start a brand new business where you're just going to start from square one. The advantages of that is you're not hampered by previous image or technologies. You can choose the location, name, logo, relationships. Again, you're starting from square one. And you can explore new markets and directions. Some disadvantages, what are the good points, are also some of the bad points. There's no base. You must build everything new. Starting a new business is usually a greater risk. And sometimes if you have no track record, that can equal difficulty in getting financed. Not always. It makes it a little more difficult because you have to show them what you're doing as compared to an existing business. That's another thing you can do. You can buy an existing business. Maybe there's a business out there that's similar to your idea. And by taking that and improving it with your idea, you can grow that business. Those advantages, they're established clientele, suppliers, or location. It's a known quantity, a proven formula or name, so you know if it's going to work or not. There's usually some help in starting and running the business. You can talk to the previous owners, And you can review their records to make sure you understand what your potential is for your business. Sometimes it can be easier to obtain financing because you can prove what the business did in previous years. The disadvantages, there could be a lot of potential hidden issues. Things like legal. Do they have outstanding claims against them that you're now inheriting? Debts. You can get their reputation, whether it's good or bad. You may find there's some loyalty to the owner that doesn't transfer over to you. So there's some issues there. There's no guarantee that success will continue. One of the things I'd recommend, if you are going to try to buy a business, see if you can do an asset-only purchase. What that is you're just buying the assets of the company. That can be their products, their names, their marketing, but you're not purchasing some of the legal issues. So something to think about if you have an opportunity. Next, you might want to look at buying a franchise. The advantage is it's a proven image of product and service. There's some marketing and sales power from that franchise. They sometimes can offer you training and professional guidance. And there's continued consulting relationship. The franchise wants you to succeed, so they're going to help you. You might have access to other franchisees for help. I don't want to say the franchise is bad, because sometimes you can really change a franchise into what you need. I was on a business trip a couple of years ago up in the northern end of Canada, and I walked into a Subway. And the first thing they had on the menu was lobster rolls. I said, why would a Subway have lobster rolls? Well, the area I was at was one of the biggest lobster areas. And they were able to take their franchise, use the Subway name, but really change it to what they wanted. Some disadvantages, though, you will lose some control. You're not always your own boss. You have to do what the franchise says. If it is a franchise, it equals royalties and other fees to them. There may be operational boundaries and limited choices. You may not be allowed to expand into certain areas or offer certain products. And many times you're going to sign a binding contract. It's not the easiest thing to get out if it doesn't work well. Home-based businesses, those are advantages. They're convenient. It's convenient work location. It's less expensive sometimes to start because you're working out of your home. It gives you a flexible schedule. And it can be, depending how it's set up, some tax advantages, whether it be the square foot of your office in the home or a percentage of utilities. The disadvantages, you need to make sure you can run a business from your home. There could be some zoning or deed restrictions. You are somewhat isolated from others, so it's just you and your home, so you don't have the support sometimes that you need. Sometimes financing, if you need money, can be difficult, again, because you don't have a location or any assets. If you ever worked at home, and I did for many years, family distractions. Things happen that pull you away from your job, and therefore you can't do your business. And there's always a potential for the IRS to scrutinize what you're doing on the tax advantages. You have a good accountant, they can help you through that process, but it's just something to think about. Nonprofits. I've been approached many times at SCORE that people want to do a nonprofit. The advantage is it assists others, it's for the greater good, and that's why they want to do it. If you do have a nonprofit, you may qualify for government or foundation grants, donations, or volunteer help. And allows the operation to work in a non-for-profit status. And there's some tax benefits, there's some regulations that it helps. The disadvantages, to be a nonprofit, you usually have to focus on something educational or a charitable purpose. And those who create the organization cannot profit from it. If there are any profits, they must remain in the organization. And to get those the nonprofit status and some of the tax benefits, you must apply or qualify for what's known as a 501c3 status or a sales tax exemption. That can be time consuming. You have to now apply, and whatever state you're in has to give you approval for that. I've had nonprofits, sometimes it takes 7-8 months to get that. I've also had other nonprofits where the state said you don't qualify. So it's not always an automatic, but it is for a greater good. Online businesses, advantages, there's a lower startup cost. You can do an expanded geographic reach. You're not limited by the area that you're operating in. There is a convenience and accessibility to your products or sales, and there's a lot of flexibility to it. The disadvantage, there's a low conversion rate. Usually you do not make as much money online as you would in a normal store. That's always the case, but sometimes it is. There's a lower barrier to entry, so therefore you can have higher competition. It's easier for someone down the street to think of your same idea and put it online. You don't have some of the protection you would as a brick and mortar store. It's more difficult to understand what your visitors' expectations are because in many cases you're not talking to them. They're ordering online, so it's hard to tell what they're expecting of your business. That's the last thing, no personal contact, so you have limited sensory info. Any of these things, you can do any group of these, but just a way to start again. Okay, we've talked about the characteristics you need. We talked about some different businesses. Now, let's move into your business concept. What is your idea? You start with the business idea, and basically what you're doing is defining the market need. For some reason, they're out in that market, there is a niche that's not being filled by a competitor or another product. What you're hoping to do with your business is fulfill that need or solve a problem. You have products or services or features and benefits that make you wanted by the customer. There's some competitive advantage to you. In general, what's that mean? Who needs it? Why do you need it? And how is it different or better than your competition? If you can look at your idea in those terms, you can figure out how to proceed. How are you going to sell it? What are the typical channels of sales? There are different channels out there, and you have to decide what works good or what combination works good for you. There are direct sales to a final customer. That's when you may have a brick and mortar store or you're selling directly to a customer who's calling you or coming in to see you. Business to business. You have a product or service that a businessman needs. Maybe you're a software company and you decided a new way to do accounting or whatever. You're not going to sell it to the average person, but you may go to businesses. And that's going to change how you market. Producer to distributor to retailer. What that means is you're making a product, you're selling it to a distributor. Maybe it's Giant Eagle, maybe it's Walmart, and they in turn are going to sell it to the retailer. Expands your market greater, but it's a little more difficult to get into. And finally, the internet. Are you planning on putting up your own web page, trying to sell it that way, or going through Etsy or Amazon? Different ways that you have to look at. And I would always recommend at least start with one. You can expand to other ones. But when you're thinking about this, what's the best channel for selling your product? Okay, if you're thinking about what you're doing, you're thinking about your business, okay, let's start analyzing some critical information. There's 4 areas you really need to do some analyzation to make sure your product's going to work. The industry, your customers, your competitors, and then your market trends. Let's talk about key industry factors. First of all, where are you going to get your product or the components to make up your product, your suppliers? What's their reliability? I met a client a couple months ago. She had an excellent business plan. She was going to sell a specific type of product. She had a 30-page business plan. I asked her one question: where are you getting your supplies at? And she was looking for some handmade items that more like a trade. As she went out, she couldn't find enough suppliers to do her business. So she had to kind of change it. So what's your availability? What's your reliability? Look at your business risk. First of all, are there any legal hurdles that are going to stop you from running your business? Is there a patent on this product? Is it already patented? Are there permits or are there licenses required? Take a look at the legal. Then take a look at what's your risk. What's your product demand? What do you really think your product's going to sell? And is there any longevity in it? You might go out and sell a product that has 100 really good customers, but after you sell to those 100 customers, do you still have someone? Look at the distribution system. How are you going to do this? It goes back to how you're going to sell. And what is the reliability of a distribution system, whether it's directly to a customer or through a third party? And the old saying, location, location, location. Where are you going to try to be? You have to pick a location that, number one, if you're selling on a brick and mortar store, it's going to put you in the marketplace, but then not cost so much that your rent is astronomical. So some things to think about there. Service businesses, a little bit different if you're in a service business. As Mark told you, I sold commercial insurance for years. So I didn't have a product in my hand I could sell. When you're doing a service business, customer contact is the challenge. First, how are you going to find your prospects? How are you going to go out and figure out who are you going to sell to and how are they going to find out about you? Once you find those prospects, you have to prepare bids. How are you going to make your proposal? How are you going to sell? How did I sell my insurance? Then once you get your bids together, many times if you're a service company, you need to make a presentation. A lot different than just someone coming in and asking you questions. You need to understand what your customer needs and how you're going to do it. Next, for a service business, closing the deal, the biggest challenge. I don't know how many times in my career when I was selling, I thought I had the deal closed and later on found out the customer went elsewhere. That's as much as important as the other three starting points. Then once you close the deal, how are you going to process the orders? How are you going to make sure your customer contact is complete? So something to think about. People think sometimes service business is a little bit easier. It's a different type of challenge. Okay, you got your ideas. What's your target market? Who do you serve? Again, what type of customer? Retailer, consumer, whatever. How are you going to look at the market size? And do you have realistic trade? Are you able to grow this market, or is it a declining market? Is it something that you're selling to senior citizens only, and as they slowly get into retirement more, they're not going to buy as much? So something to think about. What you can do is do a customer profile. Take a look at some of the key demographics. Look at their income level or ability to pay. What level are you going for? Is there a gender you're going after? Is there a geographic area? Take a look at lifestyles, and then take a look at buying habits and behaviors. Next, take a look at your competition. Who are you going to be in competition with? Even if it's a brand new product, there's probably something out there that was similar or does a similar type of thing. Take a look at the size of their operation and the number of employees they had. What is their price? And more importantly, what is their quality? Can you beat their quality and maybe not beat their price? Are there features or services provided them fill that need of the market? Do they use suppliers or contractors? Figure out what their reputation is, their strengths and weaknesses. Then if possible, do personal visits and observation. Be a customer. Walk into if they have a store. Go online and see what it takes to order their product. And from that, you should be able to understand, if you get a good look at them, are they being profitable? Are you getting into a competition with some company that's not making money? And how are you going to make money? And think about that. Some other critical information, if you need to get things, where can you get it? Ask directly, ask someone, usually a distant competitor. If you think you're going to do something in Pittsburgh and you have a competitor in Cincinnati, it's amazing. People will help other people if you call them up, and they love to talk about their business. Ask suppliers. If you're thinking of getting a supplier, find out who your competitor is and see if you're able to get them as a supplier. Ask your competitors' customers, your future customers. If you know someone, see what they're thinking about. Why do they go there? What do they like about that place? You can talk to them. Be a customer. Walk in and maybe try to buy a product and see what you like or dislike. You can join some trade associations. Some trade associations allow you to join the first year free of charge. If they're in a trade association, you can do some research on their types of customers. And always, always check competitor websites. You can find out so much information there. And not just websites. Look at LinkedIn. Look at Facebook. Look at some of the other areas where there might be information on your competition. Some other competitive data, you can talk to competitors, suppliers, trade associations, libraries, and there's something called a D&B. It's a financial report. Now, you would have to pay for that, but it gives you some information. Competitor data, where can you find that? When you're done, you should understand what they offer, their prices, their features, their annual sales, their size and profitability, and more importantly, what is their market strategy? So when you're done doing your competitive data, you're going to know what their strengths and weaknesses are and what you're going to be competing with. We talked before about customers. Where are some good sources to get customer data? Good. Internet really is great. You can find so much nowadays. There is census data and government websites that exist. You can go into trade associations. There's civic and community organizations that can help you. And there's library references. Some of the places in Pittsburgh are really good. One of the best business libraries is Carnegie Library. They are temporarily closed because of the recent COVID-19 situation, but when they open up, they're temporarily in Oakland, but they have another office in downtown Pittsburgh. If you call them up, they have a myriad of resources for you. Just don't call up and make an appointment. Tell them about your business a little bit, and they can research a lot of this information so you can understand what the demographics are, where you want to go, what businesses are out there. Carnegie Library is just a great resource. We're really lucky to have them in Pittsburgh. The Mount Lebanon Library that we're sponsoring with also has great materials. You can go to them, start. They're very good, and they'll give you some good information. A lot of resource manuals exist, and the librarian's glad to point you to those. There's some other web-based searches for information. One of the ones I use most is Info USA. It's a free web base. It gives you, again, a lot of different information. And whether you go to Mount Lebanon or Carnegie or any other library, you'd be amazed how many reference books have been built and exist on your competition and your customers. Okay, when you're done, when you do your market selection, your comparison, what you're going to understand is your target customer's needs. What's there? What did you need to be profitable, considering the cost and the price? What your expected amount of sales will be in the next year or two. Channel conflict. Are you going to be conflicted with maybe Walmart selling you or someone else? Or are you going to have a challenge going through a third party to sell? From all this, you should be able to understand your competitive environment. Is it favorable or is it unfavorable? And from there, you can make your plan on how to do that. And most importantly, after you do all this research, don't try to squeeze your vision into something that doesn't fit. Will your vision and skills fit what you want to do? Next, marketing and sales approach. What is the marketing and sales approach you want to use? How are we going to go out there and sell this product? First place you have to understand is price. What is the cost you want? And what do you think your consumer's reaction will be to that price? What's your competition's price? And most importantly, think about credit terms and discount. Those have never sold with credit cards before. When you use credit cards, there is a fee charged you as not the customer, but you as the selling company. That fee can be anywhere from 1% to 5% sometimes. So you have to understand that. And if you're going to do a lot of credit card terms, you need to understand you might have to raise your price to cover that. Also, some discounts. What do you plan on doing from a discount standpoint? If you buy 10 products, you're going to get the 11th free. You have to figure all that when you're coming up with a total price and a marketing plan. Some pricing considerations. Take a look at the initial price. Take a look at cost of materials and services plus profit. So you have to understand what's it going to cost me to make my service, to make my product. And then what profit do I pay off loans, costs, things like that. Now take a look. Does that match the competition? Are you in the ballpark? You might have to, if you start adjust price, you monitor customer demand. You compare yourself to the competition. You have to ensure value to the customer. And when you're adjusting your price, you realize I have a better product and I am not selling that properly to validate the extra cost of my product. Then ultimately you might have to reduce costs. But if you have to reduce costs, take a look at that before increasing price. If you can think of ways to improve your flow and such. Different ways. I've worked with industrial engineering from a manufacturing standpoint that comes up with ideas to improve production. You might look at selling, buying larger amounts or something like that. So always take a look at that to see how you can reduce your costs. You don't want to set your price too low. That disrupts the market. You're going to get into possibly a price war. And usually for most price wars because you do not have the resources to fight that war. Or if you get in a price war with someone down the street, they still may have enough money, enough capital since they've been in business for a while to outlast you in a price war. Okay, so you got an idea what's your pricing strategy. What is the market price that you came up with? Some typical strategies you want to maybe add value to your premiums. What value is your product that may have someone pay 5, 10% more than your competition or what's been out there? Take a look at channel considerations, your consumer or dealer. What that means is if you're selling through Walmart, what's their markup? Will it still be competitive? Look at other options. Again, the markup costs from others. Look at bundling. Maybe you have an idea where you're selling 2 different similar products, and by bundling them together, you can sell them at a different price. Take a look at your customer type. What are they looking to buy? Are they a sales price only, a price driven, or are they going to look at the type of product you have? And then think about promotions. And you might have to do that if you can do a promotion every month, you might have to figure that in your pricing strategy. Okay, you came up with a price. Your next challenge is marketing. Your product or service will not sell itself. You need a strategy used to create a desire to purchase. So you need some type of idea that get people to come out and come to your facility. Your marketing also creates your company image, which is very important. Anything you do to get and keep customers is also a part of marketing. You start with branding. What is your name recognition? How do you come up with a name that people are going to recognize that, whether they're looking on the internet or just seeing a store name, is going to give them the feeling that this is a good product and something they want to do. As I said, this is the first of 6 different workshops. Later in the fall, we hope to go into a little bit more on marketing, and branding is a big part of that. When you're branding, or your qualifications, what makes your product unique or service in that branding, so you distinguish yourself from competition. What's your market identity with your branding? What are you trying to do? Are you going after high-end customers where money is not as much of an issue or price, more on service? Or are you looking for something that you want the average consumer to buy at a reasonable price? And then how are you going to advertise this? How are you going to get that branding out? Marketing. It's a concise message about your product or service that fulfills the target customer's needs. We keep on talking about that. What is that need out there? What does your customer want? Does it talk about quality? Does it talk about price, availability, dependability? Things like that sell products. I'll be honest with you, I've seen so many companies start, and price is not the driving factor when they're building their reputation. It's quality, dependability. Make sure your market clearly identifies unique or key features of your product, so people know that when they see an advertisement. It can be consistently communicated in all your marketing materials and media. You know, listen to commercials nowadays. I always use Liberty Mutual as an example. You've probably all heard the Liberty Mutual advertisement. Don't buy what you don't need. But they say that all the time. So every one of their commercials has that in it. That's what you need. When you get that idea, make sure you're consistently marketing that in all your materials. When you talk about products and service, your marketing description should include any special benefits. So there's something in there to make your product a little bit better or different than the competition. Same thing with unique features. There's something unique about it. You know, sometimes a unique feature can be the color of the product, just to make it distinguished from something else. What's your production and delivery? Sometimes the quality of production and how it's delivered is important. It may not affect your price, but again, it's a good marketing. If you're using suppliers, you're buying from someone, and that supplier has a good reputation, make sure you use them in your marketing. Things like intellectual property, special permits, industry codes, be sure to highlight that. Some manufacturing facilities are required to build things to ASME codes or government codes. That states that your product is made to another standard, not just your own. So sometimes that's a good advertising ploy to get people to realize how good your product is. When you're done, your marketing strategy should outline a marketing message. It should relate to the channel choices to your sales approach, whether that's direct, internet, or whatever. Methods used and related costs. You got to figure out what's going to cost. There's some one-time costs. Maybe you put a sales booth out, a web design. Initially, when you buy that web sales booth or do that web design, that's a one-time cost. You may have periodic expenses you're planning on doing, advertisements, reprints, things being sent out every month to a consumer. Staff marketing approaches and times. How are you going to do this? Who's going to have the time to do it? Again, when we first talked about the entrepreneur's characteristics, we talked about wearing many different hats. Who's going to handle the marketing, and who's going to have the time to do that? And always think about other promotional activities, something new. Just because you have an idea doesn't mean you can't modify it and expand it. There are different methods of communications and tools. We're just going to talk about these real quickly so you know what they are. Again, later on when we do the marketing in the fall, there's a lot more different ways of going. But you got advertising, can be some of the most expensive. Public relations, whether it be print, radio, TV, you'd be surprised how many small newspapers or radio stations will do a quick bio on your company or your new business. Some things like business card, trifles, stationery, flyers. Some of your paper that you're giving out can sometimes be a very good marketing tool. Internet, websites, email searches, search engine marketing, social media, content marketing. Again, internet's a whole, I could talk an hour on that. And we hope later on in the fall, as we move through these 6 things, we'll have a internet marketing presentation will give you some help. Think about product samples, special offers, presentation materials, signage. And one thing that always can help you is a customer survey. That tells the customer you're interested. It can sometimes help you market your product. Just doesn't have to be a customer that bought something. They come into your store, ask them for a survey to follow up with them. Some popular social media technology. Again, I'm not getting into detail on this. We can talk about it all the time. There's different ways to do it, whether it be on Facebook, Twitter, LinkedIn. LinkedIn was always thought to be more of this type of marketing. It's really becoming more and more like Facebook, where there's a lot of different information there. I see a lot of people using LinkedIn now, not just looking for a job, but also looking to market or sell a product. On Google, there's all kinds of things on Google, YouTube, if you ever do a YouTube video, and numerous blogs. Again, I don't want to get in real detail on these. We will have a marketing expert come in later to go into much more detail, but just some areas you can think about. If there's an area that you want to do some research in, you can start doing some of your own research. Thinking about marketing and sales. Marketing gets customers in the doors. Sales brings in the money. Effective sales requires attention, common sense, and creative thinking. Prepare for the cycle based on your marketing plan. You may want to do some marketing in the summer, prior to the summer, if you have a product that has more of a seasonal aspect to it. Know your company's strengths and weaknesses. Every company has a weakness, and you need to know that and know how to use that effectively or to downplay it. Never be satisfied. Know your competitors' strengths and weaknesses. What are their good things and bad things, and be ready to use that. And never be satisfied with the status quo. That's what happened with some of the companies I showed you in the first or second slide, where after 2 or 3 years, they were no longer around. They stayed status quo. They didn't grow. Their market penetration began to shrink, and they were unable to make up for it. So always be ready to make some changes. How do you get your customers and keeping them? That's more important. You start getting people in, you've got to provide a wow experience. How are they going to be when they come into your store, go on your internet, do your service? You want to make sure afterwards they had a good experience. You want to entice them to stay. Social networks, email, mobile events, direct mail, different ways to keep in touch once you get them. I don't know of any store now, a clothing store I go to, that doesn't ask for my email. Gets inundated sometimes, but it's good because they give me coupons and some discount. So some things to think about. Engage people with discussions, promotions, events, policies, surveys, sharing information. You'd be amazed how you can start building a social network by just engaging people. And that's what engagement equals: social visibility and new prospects. We're about 40 minutes into this. We got another half hour or so. Why don't we take a quick 5-minute break, and we'll come back and talk about some of the other areas of the presentation. So how about 5 minutes? We'll get started back then. Thank you. All right. We've gone over a lot of things to think about. Moving into a little bit of the support area, making it legal. Okay. You have to decide some type of business organization, whether it be a sole proprietorship, a partnership, LLC, S Corp, C Corp, nonprofit. Again, in July, we have an attorney coming in that'll go in much more detail on some of the advantages or disadvantages. But these are some of the common types of partnerships that you will see, or businesses rather you will see. The most simple are sole proprietorships or partnerships, but they have some liability issues and sometimes some tax issues. If liability or taxation is concerned, an LLC or S Corp or C Corp could be the issue. Again, I have many people coming in wanting to do good deeds, and they look at nonprofits. Nonprofits are an excellent way to get some tax advantages, get some grants, but again, filing can be an issue. If you go out and start a company tomorrow, the government won't tell you, no, you can't do that, as long as it's legal. But sometimes nonprofits, if there's another nonprofit in that same area, it might be more difficult. So just something to think about. Think about government regulations, whether it be business licenses, fees, or approvals. Take a look at some of these things. If you start a business and you have employees, you got to take a look at things like labor laws or immigration laws. There are requirements that you have to put paperwork in, even though you may not have immigrants working for you, or, so there's different areas there. If you're going to have employees, you got to look at the IRS or Social Security withholdings and payments. And one area a lot of companies have challenges with their sales tax. If you're selling a product, depends on what state you're in, there are different laws for the sales tax. So you got to get someone to help you look at government regulations. Insurance considerations. There are different reasons why you might need insurance. Most people buy insurance to protect assets, but as a new business, there might be some legal reasons or business partner requirements. If you have a car in Pennsylvania, you're required to have auto insurance. That same thing exists with a business. If you have employees, you're required to have workers' compensation. If you're leasing a building, you're leasing an office space or something, many times your business partner, your landlord will require you to have that. If you open up a hair salon in the state of Pennsylvania, you need to be licensed, you need to get insurance. So there's many reasons why you need to get insurance. And some of the common coverages you'll see down below are ones you'll look at. Liability is probably one of the most common requirements. That can also be professional if you're providing a service. So just some things to think about from insurance. Basically, to keep it legal, every business needs help. You need some business partners, a banker. You need some place to do your banking. So you can try to pick a bank that will help a small business and give you some advice. You may need to talk to an accountant to set up your legal or your paperwork. It's one thing that I am not good at. I am not an accountant. I don't have a background. So if I were to start a business, that's one of the first people I'd help. If you're going to sign contracts or do things, you may have to talk to a lawyer. If you're a little bit more involved in your insurance requirements, an agent there can help you. And one of the best places, I know Mark talked about it when we started, or is a business mentor, someone you can talk to, whether that's a neighbor or a friend who has their business, or it could be a score mentor, that's someone that's been in business for years that can give you some advice and someone to talk to. Next, financial projections and plans. Why is a financial plan important? It helps you examine the feasibility of your numbers. It shows, is my business actually going to be successful? It organizes your business finance, and it's a modeling tool that can help you evaluate variable factors, different things that are going to cause you to be either profitable or unprofitable. It can be a benchmark for tracking your progress to make sure you're moving in the right direction, and a blueprint to kind of adjust to achieve your financial goals. Some basic components of your financial plan, 5 areas I always talk about: required startup funds, fixed operating expenses, salary and wages if you have employees, projected sales forecast, and cash receipts and distributions. Now, next month, we have an accountant, Will Winters, excellent for startup. He will be coming in doing a webinar on how you get your financial plan in place. But I do want to talk a little about these different areas. First, required startup funds. How much money do you need to start and operate? So before you turn the key and start that business, there are going to be costs. How much do you need? What will they be used for? And also consider starting funding for non-reoccurring costs, like a license or a permit or fees. And on the right-hand side, you can see some of these different startup things. The cost of getting inventory to start, deposits on your rent or utilities before sometimes they even let you start. You have to give some fees to pay there. Working capital, operating capital. There's different things that you will need to start up. Next, what are some fixed operating expenses? The fixed operating expenses are those expenses that you have weekly, monthly, whatever, that are there whether you sell one product or 100 products. There are things like insurance, licenses, rents or leases, supplies, utilities. These are things you have to understand are going to be a bill every single month when you're looking at your financial projections. If you have employees, take a look at salaries and wages. Different types of employees. Are the owners going to be the only employees, or you can have some full-time employees or part-time employees? You're going to work with independent contractors, either 1099 or subcontractors. So take a look and you can figure out your total salary and wages. What will you be paying those people? Then you have to understand there's payroll tax and benefits. There are additional costs for every dollar that you pay in wages. Things like Social Security, what's that, 7.5%. Unemployment taxes, workers' compensation. If you provide health care, those costs. On average, I tell companies for every dollar you pay out in wages, you're probably going to pay $1.25 up to $1.85, depending on how involved your benefits program are. And sometimes to get a good new employee, you have to be competitive, and those benefits may be necessary. Okay, your projected sales data. Question I get the most is, how do I do that? You take a look at your unit cost and price. So what's it cost you to make it? What are you going to charge? And you can determine that from your research and your cost and your competition. So you come up with that price we talked about earlier. Then your sales volume, you estimate that from the market. How much penetration, how much sales you're going to get. Every company starts out slow and then hopefully grows. And again, you got to take a look at your competition. Are you going to be able to have competition that you can outdo, or you're going to have to always have competition? And sometimes you have to back in the number to make your business profitable. You say, look, I'm going to need X amount of sales at this price within the first year, 2 years to get to a profitable standpoint. And some of the things you need to look at is something called gross profit margin. That is your sales minus your direct cost of sales. That's not just a direct cost to produce that product, but all those fixed costs we talked about, variable costs. And that determines the adequacy of your gross price. So basically, as you're starting, you're trying to figure out, okay, how much am I going to sell? What price is going to be good? What will allow me to penetrate in the market? And can I make a profit from that? Some things we'll talk about more next month are just some cash receipts and distributions. Understand where you are. There's different types of financial statements. There's an income statement. That's how long do I use that to reach profitability. That's what I'm getting in from my sales. Do I make a profit or loss? Cash flow statements. Do I have enough sources of funds to operate, sustain, and grow business? Talk about cash flow. That's the money going out for your fixed or variable expenses compared to the money you're getting in, whether it be through loans or through investments or your sales. And ultimately, you need to put together a balance sheet. What are my assets and liability? And that'll tell you what are you worth if you're making a profit. Again, next month, Will does an excellent job of explaining how you set these up and gets into much more detail. But it's something you can start thinking about now, how you're going to take a look at it. Accounting and record keeping, you need to choose a system. Are you going to do it manually or computerized? Are you going to hire a bookkeeper or do it yourself? Training and education for yourself in accounting and understanding financial statements. It's always important, even if you're having a bookkeeper or an accountant do this, you need to go get some education so you understand what those numbers truly say. And then working with your accountant. If you do work with an accountant, find someone who you feel comfortable with. They're going to share a lot of important data and information you need to feel comfortable. And from that area, you can build your financial model and decide whether or not I'm going forward, I need to make changes, or I'm making a profit. Funding sources. Many companies still need money. They need capital to start. Record keeping and financing. Preparation is essential. That's why, as we talked about how you're going to do your accounting and bookkeeping, that's really essential. If you have to go to a lender, they want facts, research, and accurate projections. So that's what's really good about the financial end. If you have good record keeping, you can show that to a lender if you need that. The different types of capital, some of the traditionals, your own owner's equity investment. What do you have? Whether it be money on hand that you saved up, your investments. You might have an insurance policy you can use a surrender value or get a loan against. Family and friends. Who do you know that also wants to be part of your business can give you some money? A home equity loan. Maybe you own a house, you can get that. A bank or credit union financing, very common. There's a lot of different ways you can get financing through your bank or credit union. Credit cards, I always strongly discourage use of credit cards. The interest rates are just too high. Now, you might have to use credit cards for a short-term basis, but if you're putting anything long-term on a credit card, you really should look into other types of financing. You might take partners in. Maybe you don't need some capital. You might have a silent partner that doesn't want to run the business, but is willing to invest in you. As you get a little bit bigger, sometimes you can do capital stock. You can make yourself an S or C Corp and actually sell stock. That's how I became a part-time owner of my company. As I first came aboard, I bought some stock to help with the perpetuation plans of our company. And there are some government grants out there that you could qualify for. Some non-traditional types, the SBA has guaranteed loans through banks. They'll come up different times for different organizations. There are different types of loans for minority interests, for women, for veterans, for entrepreneurs. There's a lot of different types of guaranteed loans that exist up there. And that's also where you see some government sources. You can use angel or venture capitalists. There are people that have money out there that are willing to invest in ideas. Angel funds, you actually would go make a presentation and one or two of the people on the angel fund may actually invest in you. And a newer area you're seeing more and more of that I see actually is crowdfunding, a different way to approach. What is crowdfunding? How it works? Post a business idea on a crowdfunding site. That's an internet site. It could be by one of these companies. There are numerous other companies out there that do this. And they post it on the internet. And then people who think that's a good idea, want to support it, want to invest in it, then provide money to you to raise capital. Sometimes they get returns on it, and depending on the setup, it can be just something, a donation to help a good idea get up and running. The crowdfunding entity usually receives a percentage of the amount. Depending on your crowdfund company, that can be anywhere from 1 to 10% of the monies they bring in. Again, it varies, and depending on how you want to do it and how your product is, I would research which crowdfunding website works best for you. If you have to go to a bank and get a loan, the loan application, lenders and banks are looking for a couple good things. Good credit, some experience or commitment, a feasible business plan. They want you to know what's your plan going to be in the future. End of the day, we'll talk about how to put a business plan, at least start one together. Some owner equity, they want to make sure you have some skin in the game and sufficient collateral to start your business. So if you're going to go to a bank and say, I want $1 from you guys, they're probably going to want you to get some other types of funding. One of the things you'll hear when you go to any type of loan is the 6 C's of credit: character, capacity, collateral, capital, conditions, and cash flow. Character. Are you trustworthy? Do you have personal and business credit history? They're going to look at your integrity. You might have to bring in references. What are the quality of those? They'll take a look at your experience in the business. Again, maybe not running a business, but again, an idea that fits your skills or knowledge. An impression you make on your lender or investor. It's really important when you first meet them. It's still a people business loans, so you want to make sure you're doing a good impression. Capacity. Is your company able to repay the amount borrowed? Again, that's your projection. Here's what I think my company is going to do. This is where I think I'll be. How soon can you generate a positive cash flow? They're going to ask, and it's not bad to say it's going to take me a year or 2, 3 years to really be profitable. They understand that. When will you show a profit? How large do you expect your profit to be? And will that profit be sustained in the future? That's really important. We talked about the longevity of your company. Banks are not looking for someone to be in business 1 or 2 years. They're looking hopefully for a long-term relationship. Capital. That's the money you personally have invested or your partners or investors. That's the basic money. I've got this capital to start the business. Collateral. They may ask for additional forms of security, some secondary source of repayment, whether that be your house, some property, a third-party guarantee. Do you have tangible assets you can use? Do you have property other than your house somewhere else? Equipments, account receivable, inventories, things like that that they can see that you do have money. I hate to say it, so they can come back if you do not pay on your loan to get some of their money back. They'll talk about conditions. That's the terms of the loan. They're going to ask you, what's your intended purpose of the loan? You can't just say, hey, I'm starting a business, I just want a loan. No, I want to use this loan. I have capital to start it. I want to buy inventory. I want to buy equipment or whatever. How much is requested and why? I need this much to put a oven in my new restaurant. And what will be the length of the loan? Local economic climate of your industry will affect that. Are you going into a good industry that has a lot of success? And again, your business, how good is your business going to be? Cash flow. When you start working, where's your money coming from to repay the debt? Okay, how do you plan to make money? Where will all the money go? If you're bringing in money, is it going to go to pay for more inventory? Is it going to pay for wages? Or are you going to have some money back that'll give you a cushion in case you do have a bad time so you can keep on paying on your fixed costs and maybe your loans? They're going to look for a credit report. In general, and I can't speak specifics, in general, a FICO score of 700 or greater is desirable. It does not mean if you have lesser that they won't work with you. Your personal credit report is available from a lot of free sources. So, talk to your mentor. They can tell you what's been working best recently. There's a lot of different things to get your credit report to understand how good or bad they are. I know some of my credit cards that I even have right now. My Discover card every month gives me my credit rating. So there's a lot of different ways you can be creative to get that without paying for it. The bank loan application, you decide, I'm going to do this, I need a loan. You'll probably need a cover letter of introduction, just basically explaining why you need it. If possible, a summary of your financial needs. If you've been around a while, financial statements for 3 years if possible. Again, if you're just starting a new business, they're going to look at what collateral you have and what your plan is. You won't have financial statements that old. If you do have your business tax returns for 3 years, and most importantly, what is your projected cash flow statement for the next 12 months? How much will you make? They'll ask about collateral, both your business and personal. They'll probably want your personal tax returns for 3 years and some type of personal financial statements. And then some sort of resume sometimes ask, what is your knowledge? What is your business? Where did you work? I throw this in because it sometimes happens. Your credit score may drop about 5 points with each application. Find out if the bank will do business with you before you apply. One application may be enough. Banks are getting away from that. I'll be honest with you, I've understood less and less of that, but there's always that chance. So you don't want to go out and put in 10 loans. That can sometimes affect your credit rating. The application, so additional questions, claims, liens, or judgments against you. Are there any assets pledged? Tax returns and payments up to date? Do you have life insurance of face value and cash value? Some people ask me, why do they want to know if I have life insurance? Well, you're having a loan. Many times you'll have to sign a personal indemnification. And if you pass away, heaven forbid, they want to make sure there's some money available to pay off that loan. They'll probably ask you what your monthly household income is and what are your expenses. These are some things that get to be pretty private, but they need that to do the loan. Okay, we've gone through all the major areas. When you're done, when you've decided these different areas and you put your ideas to paper and you think of things, basically what you're able to do is put together a business plan. And your business plan is your projection of your business. I've seen business plans 30, 40 pages long, very involved. It doesn't have to be. To help you plan, you can make it as simple as 1 page. Your business plan puts your idea into action. It's going to walk you through the steps. And here's a very simple business template. There are different templates available on the SCORE site. If you go to either Carnegie or Mount Lebanon's business areas, you'd be surprised. They can actually show you sample business plans that you can write. I'm gonna just go through these real quickly, and I'm gonna give you a good example, because to me, I always learn best from examples. The template here, first thing, identity. That is your product or service, which you have decided, you have that idea you're going to try to sell. Next on the right, the problem. What is that need that you're going to try to fill in the market? Okay, our solution, why is your product going to address that need or problem in the market? From there, you should be able to know what your target markets are. Who am I going to target to? Next, you should understand your competition, where your revenue stream's coming in, what your marketing activities are going to be, what your expenses are, who's your team, who's going to be on your sales force or your team or your management, whatever, and then milestones. Like I said, I learned better from examples. So let me give you an example of a company. There was a company that decided to make they called themselves a wood grain toy company. Their product was wood grain toys manufactured to a high quality. It's hardwood toys, and it was aged for children 3 to 10. The problem or need they determined, parents and grandparents are always looking for a high quality, durable toys that will entertain kids and foster creativity. If you talk to parents, they're tired of kids playing on the internet or on video games. They're always looking for something that's durable, that the kids will use and be creative with it. Wood Grain Toys Company solution, they had handcrafted toys that are made from solid hardwoods, and they're designed with sufficient moving parts to engage young children without limiting imagination. So they wanted to make these toys. They think there's a need out there for kids to have toys that will foster creativity. So they figured out how to make these products. They looked at target market. I think it's really important. They did not try to sell to everyone. The target audience is adults, specifically parents and grandparents who wish to give their toys to their children and grandchildren. So it's someone out there is looking for a specific type of toy because of the creativity it could cause. The competition, wooden toys are part of a niche market with companies of all size. Large companies include the plastic toys and metal happy toys, which sell internationally. Smaller companies sell locally in shops, craft fairs, or online. So they're looking at two different competition. They're going to go against the big guys and try to beat them, or they're going to try to compete with these smaller craft fairs. So their decision, Wood Grain Toys will sell directly to customers at crafts fairs and online. So their decision was, again, we're going to go to this niche. And where this niche exists are craft fairs. People are coming in looking at a variety of crafts, and they see these wooden toys and say, that's a great idea for my kids. From the craft fairs, they're going to go online. So when the people leave that craft fair, and afterwards they think about it, they can go online and find it. Marketing activities, Wood Grain Toys will communicate with customers with an email newsletter, targeted Google and Facebook ads, social medias, and in person at craft fairs. So again, they're kind of starting with the craft fairs, but they hope to get people's names so they can then send newsletters or do Facebook ads. Their expenses, the materials for toys include wood, steel, and rubber, and the cost to make them. The other expenses are craft fair fees and travel costs. They were not planning on just doing Western Pennsylvania. They're planning on going to Ohio, New York, West Virginia. So there's a cost there. You have to stay overnight. You have to pay for a hotel room. And then they had to find some place for inventory space for products. They found out that making these products was not something you could buy real quickly. They had to get companies or craft people to make these products, and it was a slow process. So they really had to develop inventory to make sure they met the demands. So they needed space for these. Key roles, currently the only team member is the owner. As profits increase, the company will look to add an employee to assist with social media and online marketing. The milestones, as the business grows, Wood Grain Toys will advertise in target markets, especially in advance of the holiday season. There they are. Again, we talked about that earlier. You're a seasonal product. They know they can probably sell more, so they have to gear up maybe in August, maybe in July to build the products. They build their inventory. They start marketing in September and October to sell for Christmas. A very simple plan there, but it shows you what you think about, and it just gets you started. If you're going to go get a loan, many times the banks are going to look at these areas to see what your plan is to get you started and take you into the next area. Okay, we've gone through a lot of different areas. I know a lot of information. Let's do a quick summary of what we talked about. First, you start with a business idea. You've got that idea that you think is going to make a new business. Look at yourself in the mirror. Do you have the characteristics to get through it? Decide the type of business. Do I need to sell online? Do I want to do a brick and mortar store? Do I want to try to buy a franchise to start with that? Take a look at your business concept. How are you going to take that idea and make it into a product, whether through suppliers, sales change, whatever. Okay, you've got your business, you got your idea. Now, how are you going to sell it and market it? And again, you can see from the summary I gave you for the wood toy company, they had different ways they were planning on doing it. Making it legal, okay, what are you going to choose? You're going to do a sole proprietorship, you can do an LLC, whatever. Make sure you understand what the best way is for you. Financial projections and plans, how are you going to do your finances? How are you going to project it? Again, if you get an accountant or you listen to Will next month, he'll give you some information on how to set up your finances and plan ahead. And then finally, what are your funding sources? How are you going to go get that money? When you answer all these, you can develop a business plan. That's your roadmap, and that's how you get started. That's the presentation. I hope you found it interesting. I try to keep it with underneath an hour so it's not overwhelming. Let me stop the share and let me open up if there's any questions that people have.
Okay. Can you hear me okay, Bill?
Yes, I can.
All right. So I have a question here. It says that if I'm buying a business, is there a guideline in valuing a purchase price? Is it some percentage or a multiplier of the annual revenue?
Mark, you can probably help me on this because you're better at this than me, but no, you've got to take a look at their sales and their projections and figure out what it's worth. Now, there are some things that you can understand the cost, such as their assets and such, but you've got to take a look at what their records are and project forward into that. And in some of the SCORE resources, there are some information that helps you do that.
Yeah, just a little bit more perhaps. Generally speaking, when people value even small businesses, they look at what's the typical cash flow. So they look at the cash flow, or put it this way, you take your net income and add back depreciation, interest, and some other things, and that becomes your basic cash flow, and they'll take a multiple of that to come up with a purchase price. Probably the average sale price of a small business is probably somewhere between 2 and 5 times, that what's sometimes called EBITDA, which is earnings plus depreciation, interest, taxes. So that would be kind of a general guideline. Another question we have here: what's the relationship between the Dun & Bradstreet credit report and my personal credit report? Since Bill, you had mentioned that credit and credit score is a very important aspect of getting a loan.
Dun & Bradstreet are ratings on the company, not the individual. So Dun & Bradstreet or corporate or sole proprietor, whatever a business is, as compared to your own personal assets. D&Bs are used by insurance companies to see the financial stability, and sometimes by banks. That's where a small business would see it. In many cases, Dun & Bradstreet will not do businesses that are just starting up. They usually wait till there's 3 or 4 years.
So we have another question that says, are there insurance companies that you can recommend? It says that this is a service business, meaning, I guess, they themselves have a service business.
I would go get a good agent. People think that insurance, if you go to an agent, will cost you more. Actually, usually the agent gets paid commission from the insurance company, and it's no more than if you were to go online and buy. I'll use the example of Progressive Insurance. My old business, I had Progressive. It's one of my companies. I actually would have a lower price for someone that went through me as an agent than having them go online with Progressive, because Progressive figured I was doing the sales, I was doing their busy work, so it was less cost to go through an agent. So I would talk to an agent and ask them what they can do. Pick an agent that represents more than one company. That's the best way to do it.
Okay. Another question here. Do I need to put together a budget or financial plan if I'm not going to look for a loan?
There's no requirement, but I think it's a good idea. It's going to show you where you want to go, what your expenses are, and if you're going to make a profit. That's at one slide. Your business plan, your budget, your finances tell you where you want to be and where you want to go.
Okay. Another query here. Is this a good time to start a small business given the current business climate?
I think so. If it's the right market, it's the right thing to do. I don't know if I'd start a restaurant right now, but there's always, if you think of what we talked about, understand what a need is and what you're fulfilling. If you can find a need, there's never a bad time to start.
Yeah, I think what we're seeing and hearing is that certainly there are opportunities that are out there for the right kind of businesses where that given the current climate, people have a demand for it. And, some outdoor businesses can probably be pretty good. We know people are buying lots of boats and things for outdoors. People who want to go camping, people who want to do outdoor activities like that, canoes, kayaks, all kinds of things. Bikes are going through the roof. So
You can't find a bike now.
right. So there are opportunities out there. And for those who have a business, really what we're finding is that they need to be very flexible in how they get through this current pandemic. And many of them are changing how they go to market. So So you've seen what some restaurants are doing. It's not getting everybody in the door, but they're maybe keeping some of the staff working. So there are things out there that are happening. So it's not the worst time in the world. Anytime that there's big changes going on in a marketplace, can be opportunities that exist that perhaps hadn't been there before. So
I would agree. I would agree. There's never a bad time for a good idea.
right. So, I mean, what I would say in closing, if you're going to be starting a new business, understand who your friends are, and you're definitely going to need somebody that can help you, such as you're going to need a lawyer, you're going to need an accountant, you're going to need an insurance agent, and you're going to need a banker. So those are friends that you're going to have to make. What we have found as far as people who become successful in starting up a small business and in going through the pains of starting and going along, is that they typically have other friends that are in business, not competitors, but other people who own a small business, people they can talk to about their problem or how to solve that problem, people you can share your successes with, and people you can, share your sorrows with, who can really understand what you're going through. And then the last thing you might want to consider is whether you would like to have a mentor. So mentors come in many sizes and forms. You may know somebody who's a family friend, who has been in business and understands good business, that can help you out along the way. And you can consider what we talked about earlier with SCORE. We provide free and confidential mentoring. We'll try to match what you're doing with somebody that's been through this before and can understand it and help you along the way. So I don't see any other questions coming in. So I'd like to thank everybody who's participated with us tonight. Hopefully this was of great use to you. We'll send you perhaps a survey in another day or so to get your feedback. And don't forget, we've got a number of other things coming up that are part of this series that SCORE is proud to be doing with Mount Lebanon Library. So thanks, everybody. I'll say good night at this point.